Okay. Are we good to go?
We're going.
Okay.
Let's clap at the same time. That helped me last
Yeah.
week.
It's because we
Ready?
clapped at the same time. Exactly.
It did help though.
One,
One,
two,
two, three.
three. Oh, that was close. All right. Well, welcome back, everybody. We are the Balance for Life podcast, number 4. And our goal here is we would like to help you unlock and uncover the secrets of true and everlasting happiness and just help you find peace and joy in everything that you do.
Like that. True and everlasting happiness for sure. If you guys like what you hear, make sure to give us a 5-star review, hit the like button, uh, follow us, join us on social media. Where are we at, Adam?
We are on Facebook, Instagram, TikTok, all at Balance number 4 Life podcast, and then on Twitter at Adam and Perry. We're also on YouTube. You can watch videos of what we do here, where you can actually see the last 2 weeks we have not been together in the same room. So you can actually get a view of my basement as we are in the process of packing to move. And hopefully you don't judge me too harshly for that.
Well, yeah, last week it was because Adam was sick. He's still a little sick, but somehow my wife got what he had, even though he didn't come over
I
here
promise I
and they
didn't
haven't
give
seen
it
each
to
other.
her.
So, maybe you gave it to someone who gave it to someone who gave it to someone who
Could
gave
be.
it to her, but yeah,
Could be. I think it just somehow
it's going
finds its way
around.
around. Yeah,
I know a lot of people who are sick right now. Yeah,
I'm sure there are people in Payson that have had the same thing.
yep, for sure.
So
Awesome. Well, we are really excited about today's episode,
so
and
stoked.
so stoked. Um, So 90s reference there because we grew up in the 90s. We're 90s kids.
That's right.
So we're going to talk about a financial topic,
Hmm.
and it's one that I think is really interesting, and I think there are valid points on both sides,
Hmm.
and that is whether or not you should use credit cards. So we're going to talk. Neither of us are financial experts. We're not financial advisors. We have, our own experience basically is it. But I think Adam and I both have listened to several different financial gurus. So, through osmosis, we have picked up some things. But we're actually going to be talking about what different financial experts who disagree with each other say on the topic of whether or not you should use credit cards. And then we'll just give our little, 10 cents as we go along. So that's kind of going to be the flow of this episode.
Yeah, for sure. And I think this is one of those cases where it could be some controversy. There could be some things that might be said that you don't agree with, and might be some things hopefully that are said that you do agree with. I think just like with anything else that we do, our goal is to provide both sides of the scenario and hopefully help you find what will work best for you and find that balance in your life.
Yeah, definitely. We're going to present two sides and kind of let you decide where you land
Mm-hmm.
on each item. So what I did in prepping for this was I kind of knew all of this, but I put it together in a format where we can, um, make sure what we're saying accurately reflects these different financial experts rather than just going based off of memory.
Yeah.
And so we're going to touch on Dave Ramsey as well as Robert Kiyosaki and then the Money Guy Show.
Okay.
And it's funny because I feel like Dave Ramsey and Robert Kiyosaki are on two opposite extremes of a lot of
Absolutely.
different financial topics. And I feel like they both have good points. And then I feel like the Money Guy Show is kind of in the middle of them, and that's a little bit where I fall. But I do think that Ramsey and Kiyosaki both have some good points. So we're going to start with Dave Ramsey, and
Mm-hmm.
what I did was I pulled an article that's on RamseySolutions.com from Jade Warshaw, but and hopefully I pronounced that right, Warshaw. Anyway, um, as I was reading it, I feel like everything she said I could remember hearing Dave Ramsey say at one point. So I think this pretty accurately reflects Dave Ramsey's viewpoints as well.
Mm-hmm.
But just wanted to point that out. This is from Jade, who I don't know much about her other than I think she's on his staff or maybe was a guest writer. I'm not really sure, but it was an article on the website. And basically what she did was she went through some points that people make for why you need credit cards, and then she did her attempt to debunk them. And I thought there were some interesting points. So we're going to take those points one at a time.
Okay.
Um,
Perfect.
I'll go ahead and start in the first one. And I thought this was interesting because I've never heard anybody say you need credit cards for this reason.
Mm-hmm.
And apparently people say it though, but it's to protect against fraud. And she didn't really go into depth about why people say that credit cards protect against fraud.
Yeah, and I think
But I guess opposed to a check. Yeah.
Yeah, I
Say?
don't know. I think that's an interesting argument for credit cards because you think about how many people
Yeah.
do get scammed by using their credit cards. I think more.
Yeah.
Yeah, I think more of what
That was
I
my
would.
thought.
Yeah, I think more of the direction I would go with that is you're less likely to get cash stolen. And credit
Yeah.
cards might be a little bit more secure, but cash is a lot easier to just steal and hand out wherever you can. But yeah,
Yeah.
I think that the idea of using a credit card to protect against fraud, I definitely agree with this point that it's kind of useless. And
Yeah, it's kind of a moot point. Like
yeah,
you can use a debit card was her point.
mm-hmm.
The debit card's going to protect against fraud in the same way. So it's not really a good reason to use a credit card. And I think I agree with that. Although, as people have probably noticed, I'm definitely don't know enough about this area of finance to give a really strong opinion.
Mm-hmm.
But it seemed like she made good points on this. So I don't really have
Yeah.
anything to dispute there.
Okay. Yeah. So the next point that she makes is I think one of the things that people do for is carry a low balance credit card that they can use as their emergency fund, which
Right.
that could be an argument, but in this case, Ramsey's argument against that is that an emergency fund is a much better idea. Which, for those of you that have been following along our 30-day challenge, that was actually our today, but it was day 20
Today, as we're
yeah,
filming it,
as
right?
we're filming it, that was our day 20 challenge, was to start working on building that emergency fund and get at least $1,000.
Mm-hmm.
And so this is another one that I do agree with, that you should have a cash emergency fund.
Yeah, having a cash emergency fund is much better than a credit card emergency
Mm-hmm.
fund, or using a credit card in case of an emergency. I 100% agree with that. I think if you can use cash on that, you're not going to be paying interest
Mm-hmm.
on the cash that you spend in an emergency, in a tight pinch.
Yep.
So yeah, I think that's a good point as well. Dave Ramsey recommends $1,000 emergency fund. I believe the Money Guy show, they also recommend $1,000. That seems pretty standard.
Yeah.
To recommend $1,000 in case of an emergency. That'll cover a lot of things, like a washing machine going out, or a lot of maybe trips to bringing your vehicle in for repair.
Mm-hmm.
It might not cover everything that would happen to your car, but a lot of things that could happen.
Yeah.
So it's a good start to an emergency fund. Now, most financial experts also recommend that once you've had that $1,000 emergency fund, and then you pay off most of your debts or certain types of debts, that then you go to like a 4 to 6 month emergency fund.
Mm-hmm.
But that $1,000 is just to help you get to that point of getting out of debt. So that's your first little emergency fund, and then you go for a bigger one.
Yeah, exactly. And I think, again, I think that's a great point. And like Perry mentioned, credit cards, yeah, you could use that for an emergency fund, but you are going to be paying interest. You are going to be paying fees associated with that. And so I think definitely having the cash emergency fund is a much better idea. The next, let's see. Yeah, it's your point.
Me, yeah. I want to say one more thing about that last point, though. It's interesting because if you're using the credit card because you don't have the money anywhere else, then you're probably not going to be able to pay off the balance after a month. And I think that's the biggest reason to not use credit cards for emergencies, because it just means that you're definitely going to have an interest payment, and that's not a good way to go with credit cards, where the interest rates are usually around 20%. So,
mm-hmm. Or more.
Yeah, or more sometimes. Yeah.
Yep, for sure.
Okay, so the next point was, a lot of people say that you need a good credit score, and using credit cards and paying off the balance is a good way to build up your credit score. And her point was you don't need a good credit score. You can actually, even to buy a house, you just have to find the right lender and you can get a loan. And the biggest thing is your income to debt ratio, your history of employment. There's some other factors. And so even if you have a really low or don't have a credit score because you've never had debt, um, you can still get a good loan for a house. So I don't know like maybe what the counter argument to that would be, other than, so I've bought a couple of houses, bought a house and then sold and bought another one, and each time getting a loan was really easy because my wife and I have really good credit scores. So I don't think it hurts to have a great credit score. And so for me, like, I've used credit cards. My wife and I use credit cards regularly. We always pay off the balance before any interest kicks in. So we do that every month. We pay off the balance. So I like having a high credit score. Apparently, you don't need one. I would argue that maybe it makes it easier. Like, you don't have to shop around to find the right lender. You can shop around to find the best lender instead. Maybe where you get the lowest interest rate instead of whoever will give you a loan without a high credit score. That would be my thought. I don't know if you have anything to add on that, but
I actually agree 100% with that. And I will say that we fall into the opposite end of that, where we don't have great credit scores. Neither my wife or I have a great credit score. And when we did buy our first house about 5 or 6 years ago, it was actually very difficult finding somebody that would lend us the money. Because
even though you had to have the same job for what, like 12 years?
Even though I had the same job for, let's see, at the time, I think I was 6 or 7 years at the same job. We had a fairly minimal debt to income ratio. I mean, all of those other factors that they talk about. And the other thing that I will say is we ended up paying at the time what was pretty much, I think it was more than double what the prime interest rate was. And so I can tell you for a fact that, yeah, it does affect your interest rate. It does affect who will loan to you. It does affect all of those things. And so I would say, just from my perspective, that having that better credit score is, and I know Ramsey, one of his big things is pay cash for everything. But a house, especially in today's day and age, where an average modest home is close to $500,000.
I would bet that 99% of people can't pay cash for a house.
Very few people are going to be able to pay cash for a house nowadays. And so I would say that in this case, you may be better off as long as you can use it to your advantage. I mean, definitely make sure that you can pay it off, that you're able to not accrue those interest rates. But a credit card in this case, I think, does definitely help you build that credit score. And like you said, instead of having to shop around to find anybody that will loan to you, you're shopping around, finding a better interest rate and something that's going to cost you less in the long run.
Yeah. So I think having a high credit score, because you've learned how to responsibly use credit cards, definitely has an advantage. It can help to make buying a home easier. So I don't know if like having a high credit score has benefited us in any other way but that. I think with our, my wife and I have tried to pay for our cars with cash, and we've been able to do so most of the time. And we've been able to keep our debts to a minimum. Really, like our mortgage has been our main debt that we've had in our marriage. So that it definitely helped in that scenario. Otherwise, like I don't know if having a high credit score has benefited us in any way other than that. But it really made a difference.
And maybe that is the argument that Ramsey is using here, is because his big thing, I know, is no debt. It's never borrow money, pay cash. Save the money so that you can pay cash for your cars. Save the money so that you can pay cash for trips, and save the money so that you're not having to use that credit score. But again, as far as a house goes, and if that is a direct quote from this article, then I think a house in this case, especially today, is a very difficult thing, and you do need a higher credit score in order to get into a house. And I know renting even nowadays, a lot of places won't even rent to you without a minimum 600 to 650 credit score.
Okay, interesting. So, yeah. So I think there is you can push back on that point for sure.
So the next point that they make is actually paying off the balance, and this is going back to that ridiculously high interest rate that most credit cards are charging you, which in most cases for a bank credit card, it's going to be around 20%. If you're on, a Discover card or an Amex or anything like that, you're probably going to be closer to 28 to 30%. And
Mm.
the key to avoiding all of that interest and those higher fees and the penalties is just to pay it off every month,
Mm-hmm.
which is much easier said than done for most people. And I think that's the argument here is that
Yeah.
nearly half of people actually do carry a balance on those credit cards and are paying
Yeah.
interest every month. And so, those if you're in that nearly half of the population that carries a balance on your credit cards and is paying those high interest rates, then maybe you're better off not using them. Maybe you're one of the ones that's better off saving the money and trying to find other ways to go about it, because it is costing you a lot more money long term.
Yeah. See, it's interesting. My counter argument to that point that she made, that half of people don't pay the balance off, so don't get a credit card, is, well, if you're one of those half who always pays it off, then that's a moot point.
Mm-hmm.
But to play devil's advocate to my point, I kind of have the same uh, viewpoint on alcohol. Um, I don't know what the percentage is on how many people who drink alcohol become alcoholics, but I feel like I remember reading somewhere, I can't remember where, so someone correct me if I'm wrong, that it's somewhere around 20% of people who drink alcohol become alcoholics. In my mind, that's a high enough percentage that I don't I don't see the value in drinking alcohol if
Mm-hmm.
there's that high of a chance. And this is a much higher chance that if you're going to use credit cards, you're not going to be able to pay it off, because and it can be a similar reason.
Mm-hmm.
There are people who are addicted to shopping, and using a credit card enables them to continue in that addiction. So I do think there's a good counterpoint that that's a pretty high percentage,
Mm-hmm.
and so at the very least you should be very careful the way you use credit cards. But I
Absolutely.
don't necessarily think that because if half of people carry a balance, it means that you can't um, use credit cards without carrying a balance, right?
Yeah.
So
Yep. Again, um, I think that it's all about, what's going to be best for you, and
mhm.
how is that going to look in your life. And so if you are one of the ones that can pay it off each month, or even make the payments every month on it, if you have enough money to pay that interest rate and you want to work on your credit score and you want to use, all of the other things that people argue that they get credit cards for, then go for it.
Yeah, definitely. I think this is one where you kind of get to decide what you want to do with that, and
Yeah.
so make your own decision there.
Mm-hmm.
Let's see, it's my turn, right?
Mm-hmm.
So one point that she made is that a lot of people say they use credit cards for the rewards, the cash back. It's really nice to get those, and she's saying, well, they usually get offset by interest fees.
Mm-hmm.
And my counter argument is they don't get offset by interest fees if you never carry balance.
Yeah.
So um, if you're smart at using credit cards, yeah, you do get rewards and cash back that actually make it quite worth it, as long as you're able to pay it off each month.
Mm-hmm.
And that's something my wife and I have experienced. We use a credit card. Our Costco credit card is we have two credit cards, and that's the main one we use. And we use it whenever we gas up at Costco, and then we use it for other purchases we were going to purchase anyway. So we use it quite a bit. We pay it off each month, and then once a year we get a pretty decent chunk back, which is nice.
Mm-hmm.
It's nice getting that, and we don't pay that interest. So in my mind, it's worth it
Yeah.
if you're able to do it that way.
Yeah. I know I've heard other people, I can't remember exactly who it was, but somebody in a job that I was working for, we work a lot with businesses, small business owners, and things like that. And somebody was talking about how they would just they would use a credit card to pay all of their business expenses for the year. And so it's things that you already budget for, and then you pay the balance
Mm-hmm.
off. But then this individual was able to take their family to Alaska twice a year, just on the miles, the points that they got from
Yeah.
their credit card. So it is definitely something that you could use as long as you're smart with it, and rack up some of those bonus points, and actually have a pretty significant benefit.
Yeah, and I think the key that you mentioned there is budgeting,
Mm-hmm.
right? If you're budgeting, you're spending it on things you were already going to buy anyway, then it definitely can be worth it.
Yeah,
So
for sure.
she went to give some tips on how to live without credit cards. Um, and I think we can just kind of like rattle these off,
Mm-hmm.
or we could even just point people to the article. I don't know what you want to do with that, but there's 4 points. So
Yeah, well, I think really the key of living without credit cards is just um, saving money. Make sure that
mm-hmm.
you have that savings so that when those emergency things do come up, or um, I think there's a lot of resources out there that you can look at. My wife looks at a couple of different budgeting YouTubers and social media influencers that talk about different ways of budgeting. And I think if you're really interested in living without credit cards, then find a way to budget that works for you, and
Mm-hmm.
save that money, and make sure that if you say you want to go on a trip, if you want to take your family on a trip, then that just means that you have to pay cash for that trip if you don't want to use a credit card. um,
Yeah,
and then make sure
that
that
that kind
you
of
yeah, I think a lot of it is just self-explanatory. It's
yeah. You kind of summed up her points, which I thought was interesting. It's budget, be careful with your money, save for emergencies, right?
mm-hmm,
Watch your spending. And you can do those things whether you're using a credit card or not. So I think
yep,
those are good points. If you decide not to use a credit card, those are great points. If you decide that you are going to use credit cards, they're still great points.
mm-hmm,
So
yeah, for
either
sure.
way.
So
Um,
next, you brought up Robert Kiyosaki, and like you
mhm,
said, Robert Kiyosaki, for those of you that are not familiar with him, is Rich Dad Poor Dad, and
right.
that's something that I actually tended to focus a little bit more of my research on rather than Dave Ramsey.
Mhm,
I found that a lot of
mhm,
Ramsey's methods didn't necessarily fit into uh, the lifestyle that I wanted to live, and the lifestyle
mhm,
that I wanted for my family. And obviously, we know that Perry and I are in different places in life and different positions financially, and so again, whatever works for you.
mhm,
But one of the things I think is interesting is Robert Kiyosaki, so Rich Dad Poor Dad, and a lot of what his kind of emphasis is to use debt to build up assets, and his big thing
mhm,
is the difference between liabilities and assets, and so he talks about using debt, borrowing money to get into real estate or to invest
mhm.
into other ways of
A
making money
business.
into businesses. But in this case, he actually does say that you should cut up credit cards if you can't control your spending. And so I think
Yeah.
that just goes back to show that I think for the most part, everybody's on the same page that you should be in control.
Yeah. I think pretty much every financial expert that I've ever heard of says if you can't control your spending, then you shouldn't use credit cards.
Yep.
And I think that's really good advice. If using credit cards it just gets out of control for you, absolutely, don't use credit cards.
Mm-hmm.
Now, if you can figure out a way to use them intelligently, responsibly, however you want to put it, then it can really be a benefit.
Yeah. Yep. For
Um,
sure.
and then there's the Money Guy show, which in this instance of using credit cards, pretty much say the same thing as Robert Kiyosaki.
Mm-hmm.
Basically, what they say is credit card debt is bad. Using credit cards responsibly is fine.
Mm-hmm.
So they have insanely high interest rates, but if you're paying it off each month, those interest rates don't touch you,
Yeah.
and there's no downside to that.
Mm-hmm.
So I think they really line up with Robert Kiyosaki in that point that if you can't use them responsibly, don't use them. But if you can, and then
Then
they
they're
gave
fine.
some interesting statistics that now these statistics are a little different than the ones from Ramsey Solutions.
Mm-hmm.
These ones, I think they just surveyed their
Their audience.
audience, their customers, and so the stats are quite a bit different than what we got from Ramsey Solutions because I think theirs were more of a
Mm-hmm.
wide audience. So if we're talking just people in general, 50% of people don't pay off their credit cards each month.
Yeah.
But the Money Guy show found their audience to have a different numbers with that.
Yeah, well, and I think it's important to point out too that the Money Guy show's audience is probably going to be significantly different than Ramsey's
Much different.
audience. The Money
Mm-hmm.
Guy show, you're looking more at people that are a little bit more financially stable, people looking
Mm-hmm.
that are looking at ways that they can retire sooner and that they can retire more comfortably. Where Ramsey's audience is going to be probably focused more on those people who are really struggling and
Yeah.
probably don't even see the possibility of retirement in their future. So,
Dave Ramsey is super good at helping people get out of debt and get into a better financial situation.
mhm,
And I think you hit it right on the nail. In a lot of those instances, it's people who haven't learned how to control their spending to the point that like their finances are a mess.
mhm,
And then he and his team, they help people to get out of that mess. And they do a really great job at that.
yeah,
And yeah, you're exactly right. The Money Guy show is more working with people who maybe don't have too much of a mess and they're trying to figure out how do I make my money work for me
mhm,
more now that I have a good foundation.
yep,
Some of the stats, though, I wanted to share
yeah,
that I thought were really interesting. They surveyed that found that 97% of millionaires have credit cards. I think this number came from their audience of millionaires, but I'm not 100% sure on this one. The later stats I know came from their audience, but
okay,
I found that interesting. If 97% of millionaires have credit cards, that could be a correlation rather than causation, but obviously having credit cards did not prohibit all of those people from becoming millionaires.
yeah. Well,
So,
I think like you said, it could be correlation rather than causation, and it could just be because they are millionaires, which I think it's an interesting statistic in itself, because you have a millionaire who really can pay cash for everything, can pay cash for houses, can pay cash for cars, can pay cash for all those things, and yet they choose to carry a credit card. Is that for the rewards? Like I said, are they using that so that they can take their family on a trip for free every year? Are they using
mm-hmm.
it for business purposes? What is their use for that? But I think it is interesting that people who either have become millionaires using credit cards or are using credit cards even after they are millionaires.
Yeah, yeah, exactly. Right. I think that's a really good point. It doesn't necessarily mean that using a credit card is going to help you become a millionaire,
Yeah.
but I think it does point to that it doesn't have to prohibit you.
Mm-hmm.
You can use credit cards and be financially responsible and become a millionaire and retire comfortably.
Yep. For sure.
And then the other stats were out of the millionaires that they surveyed who did have credit cards, 37% of them did carry a balance,
Mm-hmm.
and 63% of them never did. So 63% of these millionaires who had credit cards never had a balance.
Mm-hmm.
And of the 37% that did carry a balance at some point, this part confused me a little bit. I think what they were saying was the ones who carried a balance but didn't anymore
Mm-hmm.
because the percentages added up to 100. Yeah, 100%. So I don't think it means that none of them still carry balance. But anyway, the percentages
Yeah.
were that 3% of them only carried a balance if there was 0% interest on the card.
Mm-hmm.
So if you had like 12 months of no interest, like they carried a balance for 12 months, but then they made sure they paid it off
Yep.
before that interest kicked in. 36% of them only carried a balance while they were in college.
Mm-hmm.
And then 61% of them fall into that where I would fall into if I were a millionaire, which I'm not yet, is they used to carry a balance, but they don't anymore.
Mm-hmm.
And the thing that really stuck out to me with that is if you're part of that 50% that carries a balance on your credit card, you don't have to stay that way, right?
Yeah.
You can continue to use a credit card and change if you know yourself and you can, right? Some people
Yeah.
maybe never can, and that's fine, right? You just need to go about it a different way. We're all different, but we can all get there.
Right.
So
right. I think
that's why I take away from that.
Yeah, I think like you said, the key takeaway is that people can change.
Mm-hmm.
But again, it all depends on you, and it depends on what kind of effort are you willing to put in. What are you going to do?
Yeah.
How are you going to make those changes to make sure that you're not carrying a balance anymore? And I think it's also interesting in here because I know we have done a topic on getting through college without debt. But I think it's interesting that of these millionaires, those that carried a balance, 36% of those that carried a balance carried it while they were in college. And so
Yeah.
they did use debt. They did use those credit cards, whether it was student loans or other forms of debt, they were still able to do that and able to get back on track. So again, I think it's completely personal. It's whether or not you feel like you can make the changes that you need to make and be strong and make those commitments to do what you need to do.
Yeah, absolutely. So I think these approaches, all of them can be the right approach.
Mm-hmm.
It just depends on you, right? You need to figure out what the best approach is for you. We each need to do that.
Mm-hmm.
Um, my kind of final thoughts on this were I tend to not love Ramsey or Kiyosaki as much as the Money Guy Show. The Money Guy Show
Yeah.
is like everything I say, I'm like, oh yeah, that makes sense. I think that's a great point. Whereas, Ramsey and Kiyosaki both do that quite a bit, but there's also things that I disagree with. I feel like Ramsey's basically he's saying like no one should use credit cards because half the people can't pay off a balance, so nobody should benefit from it because
Yeah.
what if you're one of those 50%? Whereas and then like Kiyosaki, Robert Kiyosaki, I feel like he's always saying stuff that to me comes off as like all pompous.
Mm-hmm.
He says stuff like working a regular job is for losers.
Yeah.
And I just think that's silly.
Mm-hmm.
I
Yeah, I think kind of one of the things that you pointed out is they both act like their method is the only method and it's the only
definitely.
way. And I think one of the things that we've kind of touched on that I would like to do dive a little bit deeper on in the future is when we're talking about money and talking about our finances, we have to look at it from an offensive perspective and a
Yeah.
defensive perspective. And I feel like both of these, Kiyosaki is definitely more on the offensive side
Mm-hmm.
and Dave Ramsey is definitely more on the defensive side, and they act like theirs is the only way. I like to look at it
Yeah.
more like if I'm trying to fill up a swimming pool, the more hoses I can get going in that pool, the faster it's going to fill up, right?
Right.
But at the same time, if I've got all these hoses going into it, but I'm down there with a bucket shoveling out water as fast as it's coming in, it's never going to fill up no matter how much water I'm pumping into it. So
Right.
you have to balance it out and you have to be responsible with the money that you're spending, but you also have to look for more ways to fill that pool and to bring more money into it. So I think there's good things in both of their methods, and I think it definitely goes back to looking both ways and being able
Mm-hmm.
to keep an open mind and find the things that work for you in every method and throw out the rest.
I feel like the Money Guy Show does a better job of recognizing that it isn't one size fits all.
Mm-hmm.
Whereas like Dave Ramsey and Robert Kiyosaki both kind of have this like my way's the only way,
Yep.
is the vibe that I get from each of them, and that's why I gravitate more toward the Money Guy Show.
Mm-hmm.
But then I will also say that one point that Ramsey has made that I think is a really good point that was not in this article is that it is easier to spend less if you're using cash
Mm-hmm.
because it hurts more,
Yeah.
right? Using a credit card is so easy, and you almost like don't even think about the number the
Yeah.
amount that you're spending. Whereas with cash, like you one of the methods that some people use to budget is they use an envelope method. And my wife and I have done this in the past. We don't currently, but basically you say like, okay, I'm gonna give myself $500 each month to buy groceries or whatever the number is for you and your family, right? That's
Mm-hmm.
probably low for a family of five, but I mean that's how much we're going to spend on groceries and eating out, let's say.
Mm-hmm.
And then you have that envelope, and when you get towards the end of the month and you're down to $20, like maybe you're not going to buy those popsicles that you were going to include in your shopping trip,
Yeah.
or some things that weren't as necessary. Whereas if you're using a credit card, it's harder to keep track of it. It's just easier to do it. I do think that's a really good point. I don't know if like the amount more that I spend offsets the benefits that I get from using a credit card. I'd have to do an analysis to see.
Yeah.
And but I do also think that you can become self-disciplined enough to make it to where using a credit card is similar to using that envelope method because you've just built up the discipline and you've practiced and you've become better at it. I
Yeah.
think there's a lot of value in that.
Yeah, for sure. I think again it just goes back to how much control do you have. Are
Yeah.
you one of the people that's going to budget and no matter whether you're handing out paper cash or you're swiping that card, are you going to stick within that budget or are you going to be like, "Oh, hey, this is $50 more than I anticipated to spend on groceries this month. That's okay though.
Mhm.
We want the popsicles and the soda. We're gonna get
Yeah.
those things. Um,
Right.
so I think if you're tracking it and watching that budget closely, then yeah, it definitely goes back to whatever works for you. And I think that any method that tells you that you are wrong if you do it a different way, I don't really have. Yeah, I don't really like that.
Yeah.
And
Same.
yeah.
I think you can also do a little bit of a hybrid method. Like
Hmm.
you don't have to go all cash or all credit card. Maybe you use your credit card for things that it's not going to change how much you spend, like gas. Like
Hmm.
I'm not going to drive, you know, 2 hours further somewhere because, well, I have a credit card. I can just use that for the gas. Like, I don't like driving that far. So,
Yeah.
it's already painful enough for me to fill up with gas because I don't like driving. So, for me, using my credit card to fill up my gas tank is probably going to be no different than if I used cash to fill
Hmm.
up my gas tank. And so, you could say find areas where using your credit card makes sense for you. And if you struggle with the grocery side of it, and maybe use the envelope method for your groceries and
Yeah.
whatever other categories, your fun money, your date money, things like that. And then use credit cards for the areas where it doesn't change the amount that you're spending each month.
Hmm.
So you can do a hybrid.
Yeah. Yeah. Definitely. And I think for me, using credit cards to pay for gas isn't even necessarily because it hurts more to see how much I'm spending, or because I don't want to drive, but it's because everywhere you go, the prices fluctuate so much. So it's like you budget for $2.50 a gallon, and you're budgeting for 17 gallons a week, say, and so you plan out your budget and you pay the cash, and then you end up only getting three-quarters of a tank instead of a full tank. and
Yeah.
and so having the credit card and being able to say, okay, well, I'm just going to budget for a tank of gas each week, and then I can kind of balance out other areas of my spending, once I see how the gas prices are fluctuating that week.
Right. Yeah. For sure. I don't think using cash to pay for gas would affect how much I drive or how much gas I need. It would just make it much more inconvenient
Yeah.
to gas up.
And
That's
you
the other
have to
thing. It's
actually
like
go up and talk
go
to the
into the
teller.
store and
Yeah.
yeah, think about the time savings by using a credit card to gas up. I,
Yep.
I think it would be silly to maybe there are people who use cash to fill up their gas tanks still. I don't know anyone that does that. That seems kind of ridiculous. Sure, you could use a debit card, but I don't see how that makes you spend less money or track
No.
your finances better. So, yeah.
No. I like it.
Yeah,
Okay.
awesome.
Do you want to get on
Well,
to the challenge?
let's do it. So, our challenge really is to do some self reflection, self analysis, and make a decision on whether you need to make a change with how you use credit cards. It could be maybe you decide that you need to cut up your credit cards and never use them again.
Mhm.
It could be that maybe I need to not use credit cards in certain categories of my finances, but I'll still use it in others. Or it could be that you're going to use credit cards for everything and you're doing great, or you're just going to do a little bit better at tracking what you spend and do a better job of budgeting. So determine what's going to work for you,
Mhm.
and then make any changes that you need to do better with your finances.
Yeah. Yeah, I like that. And I think the biggest thing that I like about that is doing the analysis, doing the reflection, and see how things are working for you, take an inventory, see how it's working for you, see what you need to do to change, and then make a plan to get back into whatever habits you need to get into.
Yeah, absolutely. Awesome. Well, hopefully that was interesting for people. I found it interesting.
Yeah,
I thought
I
it was a good
I
discussion.
thought it was a great conversation.
So we want to thank you guys for listening, for sticking along with us, and helping us grow our audience. Don't forget to leave us 5-star review, like, etc. That really makes a big difference.
Yeah, and don't forget, we drop new episodes every Monday. Like I said, we're on Spotify, iTunes, Amazon, Google, YouTube,
Yep,
everywhere you get your podcasts.
for sure. And then don't forget to join us next week. We are going to be talking about
I
the
don't.
perfection myth, right?
Oh, are we? Yes, yes. I
That's
think.
that's what we have on our
Okay. Yeah.
spreadsheet. So
I think next week we're going to be talking about the myth of perfection.
yeah, I like
So
that. I'm intrigued.
I'm super excited about this episode.
So stoked.
So stoked. Okay.
Awesome.
Well, we'll see you guys next time.
See you.